not sure a lot of you are interested in loans right at the moment, but I want to tell you how things work. Can everybody hear me okay? Because I hear echo. Anyways, I'll give you a little history of me. I started back in Canada in the 1990s doing loans, and from Vancouver. Back in the day, we used to do high interest loans for people who couldn't go to the bank. That was a good business for the people that couldn't get a loan, but I never thought that I would come to Costa Rica and that it would work here. What I found out is you can't get a loan in Costa Rica. If you have a dream, you're kind of stuck. The way we do it is we look for good quality loans. We're called Grupo Gap. These are the companies that we represent, and we're interested in getting you into a loan. Okay, so if you have a house that's worth, say, $200,000, we would lend you half, right? And so if you have a dream to come to Costa Rica and want to get into a business, that would be the way.
All right, so what are the worst reasons to borrow money? Right off the bat, I would say to fuel your gambling habit is probably not, a responsible reason to get into a private mortgage. To fund an extravagant vacation, also not a good reason. To pay off a family member or an ex-friend. I say ex-friend because most likely at this point, you guys are no longer friends. To pay off a mountain of credit card debt, also not a good reason. Nor loan consolidation, which means basically to borrow from Peter to pay Paul.
If you do any of those kinds of things, it's just really not a good idea to borrow money. We're not that kind of company where you can say, hey, listen, I got a lot of problems, and I'm hoping that you have a solution for us. What we're looking for is, let's say, and this is sort of a normal situation, you find a house that's worth $250, but your budget's $200. We would like to lend you the other $50,000, right? So that's sort of what we do. The other kind of loan that we like to do is, let's say you have a house that's worth $200, and you want to put a pool in worth $30,000, $40,000, $50,000. Well, that's a good loan, okay? The other number one reason to borrow money in Costa Rica is the Airbnb business. We've started a lot of Airbnb businesses for people. There was a fellow in Santa Teresa who came to us to borrow money. He had a land and he didn't have any more money than that. He came to us and he said, can you lend me some money? I said, well, Santa Teresa, by the way, is a very hot area. It's a very good area for being in. So he asked if he could borrow money on this land. I said, well, listen, you only have land that's not really that great. If you put the money that we lend you, we'll lend you a little bit, you can put a foundation in. Once you have a foundation, now it's worth more and we'll lend you more. The moral of the story is on that one, he ended up owning a B&B. He came back to us. He had a very good year. He came back to us and said, hey, listen, I want to start another one. So he ended up with 3 B&Bs in Costa Rica with no money, using ours. So that's a prime example of a perfect loan.
So I have a question. Is there any real estate agents in here? Not so much today. Well, a good reason for a real estate agent to go into business with us is for two reasons. You can get financing for us, for example, using the same numbers from before. If you have a client that has $200,000 to put down on a property and they only need the extra $50,000 to buy it, we can match you with a private investor. And at the same time, the second reason why you'd want to do that is because you can get a referral fee as well. So you can get the referral fee and you can get the funds that the client needs to purchase the property.
The kind of loans that we're always looking for is good quality loans. Every day we get tons and tons of loan, and one of the biggest tricks is people will say, my house is worth $500,000, will you lend us $250,000? We estimate the house, we value it and all that, and we realize it's worth $250,000, you're trying to sell it to us. Our ideal loan is, we call it LTV, loan to value. We'd like to stay 30% LTV, so if it's a $100,000 loan, or a $100,000 property and you want to borrow $30,000, that's a perfect loan. For $50,000, we call it no-brainers. If you look at a house, like let's say this property right here, if for instance he said, I want to borrow $50,000 on this property, that's a no-brainer. But if he came to us and he said, well, I'd like to borrow $2 million. Okay, now we got to do some math, make sure it's worth $2 million, make sure this place is worth $4 million to lend $2 million. So it gets dicey, and we have to do a lot of work. But if a guy is looking for $50,000, $100,000 on a property like this, We call that a no-brainer. My lenders love those kind of loans, and there's profit to be made for both lenders and borrowers when you have a deal like this. If you're a lender, you're always looking for the best quality loan that we can offer. So we're always looking for top-notch, normal buildings, to code, you know. We've had people come to us with a property right on the river and say, hey, listen, this is all to spec. No, it's not. Law doesn't allow you to build on top of the river, so we know that it's illegal, and so we wouldn't lend you the money on that. The other thing is we always want to make sure that you have all the permits in place first, because in Costa Rica, that's the hardest thing to get, is the permits. So if you want to come to us and borrow money and then have to wait quite a while for your permits, you're paying for nothing. For instance, if you bought a piece of land, and this is something very important, if you buy a piece of land and you want to build a house on it, and the neighbor says, you know, I believe there was a pond there once, way back in the day, it would be up to you to prove that there wasn't, and it'll cost you that money to prove it. So that's why we don't do it until you got permits. Once you got permits, all that's passed. But believe it or not, you could be slowed down for a year or two while you prove that there was no pond ever there. And your neighbor could have just pulled a fast one on you because he didn't want you to move there. So that's another reason why we don't want to lend in the beginning.
So what are the best reasons to borrow money? Starting or expanding a business is always a great idea. If you're going to be making money from one of our loans, then that is really key. That's something an investor would want to hear. But one thing that you may not want to start is something like a bar. I mean, everybody that comes down here from North America, they always kind of have the same idea. I'm going to move to the beach. I'm going to, build a bar, and I'm going to live the rest of my life off, as happy as can be. But what most people don't realize is there's actually 13 months in a year when it comes to paying an employee.
Did you guys know there's 13 months in a year in Costa Rica? How many know that? You know that? And the rest of you are probably going, well, you're crazy, right? Well, you'll know that when it comes to December, because in December, you're going to pay each of your employees 2 months' pay in December, okay? So if you didn't know that and you get into business and you hire 30 people, what a surprise Christmas is going to be for you. For you. The other thing is you need to know the laws for your staff. They are very big on taking care of the little people in Costa Rica, the staff. So you have to be careful. For instance, if somebody gets pregnant, and they can play games. We've had a person do that. They put their feet up in the desk and decided not to work, proving that they're pregnant, and they weren't in the end. So you have to watch out for all those things. So when you're doing a loan, we have to take everything into consideration. Any questions? Okay. You're back?
Yep, I'm back. So, other good reasons to borrow money, of course, investing in real estate. That's a no-brainer, of course. Something like purchasing a work vehicle. Maybe you're doing something in tourism. You want to get a bus so you can take your clients from A to B. Or maybe you're thinking bigger and you want to do something with farming. That's a great reason to go and get a private mortgage. Covering urgent expenses. For example, sometimes there's that property that you just have to buy because it's half price. Maybe the owners are going through some sort of situation where they need money now, and so that means, of course, you need money now to purchase the property.
That's just on that note, like in Costa Rica, you're always going to see the price very, very high, and they never want to drop the price, not one dime. So they stay here and they're crying for you to sell their property, and they don't drop it to here or here or here. They go straight from here to here. And if you get in on that, these are side deals where the guy got so broke because he's held out so long that you can get a good deal. So then they'll come to us and say, hey, I have to have this building. It's on a good price, and I need you to help me buy it. That's the kind of loans that we like because it all makes sense.
Yeah. So in addition, remodeling your home. If you're looking to add a second floor, or you're looking to add a new kitchen, especially things like pools or jacuzzis, these are the types of things that investors love to hear because they realize that the loan to value ratio, which means basically that the property that they're investing in is going to be increasing in value. So that is always something that the investors want to hear because that just means that their investment and the money that they're giving you is going to be going into the collateral.
Yeah, so if you buy a pool, you just drove up the price of your house. So it was $200,000. Now you put in a $50,000 pool, you might be able to get $350 for it. So that's an awesome loan. That's just beautiful.
Yeah, another good point is optimizing a property for Airbnb. For example, there's many mansions or whatnot that have these grand, living rooms and whatnot that could be actually converted into more bedrooms, which means more profit for you.
The one thing you can do in Costa Rica is own an Airbnb legally, right? Like what Sarah was saying, you have to do things properly. You can be the owner of the business and you can have staff working for you. It's the one thing that everybody seems to like to do, and there's still lots of room for B&Bs. Right, a couple of years ago was Santa Teresa was the hot spot. Right now it's down sort of Uvita. Everybody's borrowing our money to build B&Bs. That's probably one of the biggest reasons we lend out money, is to help people make money. They have ideas, but they don't have the money. And we like to help them get into whatever it is that they're doing. That's how you can live in Costa Rica if you want to make money. Everybody comes to Costa Rica and they're like, okay, so how do I make money? It's hard. And one of the best ways and one of the easiest ways is a B&B or online work.
Yeah, and especially nowadays with our technology, you can have the keys next to the bedroom and put in a little lockbox and whatnot. So technically you wouldn't be working, or you could just hire a manager to do things for you. Technically in Costa Rica you can't be hands-on with clients. You have to be more of a management role in the background. So Airbnb is a nice one that kind of allows you to not have to hire too many people. So when you have a loan request, what are the requirements that you need to submit to me so that we can start the process?
We need to know a lot about the property that we're going to do the loan on. We do our due diligence. We have an analyst who works with us, and we value the property in two ways. We value the land, which you can never fool around with. If your land is on the beach, we know what it's worth. If your land is a mile back from the beach, we also know what that's worth. So the first thing that we need to know is the price of the land, which we can figure out. The next is we'll look at the property and say, okay, it's built pretty bad, so we're not going to give it a very good score. And so it's 200 meters building with a low score. The land is worth X, and this is what we value the property at. We'll lend half of that.
So the number one thing when it comes to a loan, other than the loan to value, is the location. Mostly what we're looking for is what our investors are looking for, of course, and that's something on the beach, somewhere popular, or in the Central Valley. If you're in the middle of the sticks and you have a ton of land, usually that land is probably only going to be worth $1 a meter. So even if you have hectares and hectares, it may not be worth as much as what you think it is. And so basically what it comes down to is you'd be texting me, and I would be sending you this exact copy and paste. What I'm looking for is just the amount that you're looking to borrow in US dollars, because in Costa Rica, the two official currencies are, of course, the colones, which is, a given, and then the United States dollar, which is maybe not what people realize, but that's actually a legal currency here. So the property to be used as collateral, I'm going to need to have just your overall value of it. It's not what we go off of, but it's just a good idea of what you're thinking the property is worth. So what the funds will be used for, like I was saying, hopefully you're going to be using those funds to put right back into the property, which means that our investors are going to be more intrigued. But it doesn't necessarily mean that you have to do that. Like we were saying, if you have a business idea or if you have a property that you want to purchase, then that could be a great reason to get a private loan. We are going to look for a GPS location on Google or on Waze, just so we know exactly where it is, so that when we do give this to our analyst, he knows exactly where it is, and we can find the value of the land based off of that. Just the simple things such as the size of the lot and the size of the construction. The plano catastro is also known in English as the survey. If you have a lawyer or whatnot, they can show you what that is, and if not, you can just give us whatever the title is under. If it's under a company name or if it's under your name, we can find it ourselves via that information. And then what we need is just 10 to 15 pictures, only 10 to 15. It doesn't matter how big your property is or how many rooms. Maybe if it's a mansion, that's massive, maybe 20 at the most, but we're looking for the best quality pictures that you can supply to us. The reason being is the way that I explain it is, imagine that you're trying to sell your property. because that's pretty much what you're doing for the investor. The only thing that they have to go off of is the photos. So if you have, and I've seen it before, if you have like a mattress against the wall and it's looking, a little dirty and there's, a lot of clutter in the room, no matter how nice the house actually is, if your things are getting in the way of them seeing, your property, then that could be something that deters them. They could also make them think that maybe you don't pay on time because, if your house is a mess, then maybe your finances are in a mess. You have a question?
Yes, with the real estate listing of the house next to the wall that has lots of photos, or you want like the loan requester's personal photos?
No, if you have your house for sale, you can just send me that link, and usually that has everything that I would
Well,
need.
not necessarily my house for sale, but when I look to buy.
Yeah, the same. It's all the same.
Okay.
Yeah. Usually that's like the most professional you can get, and so that helps us out a lot.
Speaking of that, on the flip side, and you were talking about borrowing money. The other side of that is all you people that are coming here, probably some of you may be selling your property back home and have maybe $500,000 because you sold your property. Did you know if you come to Costa Rica with $500,000, you can make, for every $100,000 you put out with us, you're making $1,000 a month. So you'd be making very good income without having to have that 13th month, right, as a lender in Costa Rica. So we're always looking for good lenders as well, and they usually come from good people that are doing immigration. And for the most part, they sold their house. They're not savvy. They just sold their house and ended up with $500,000 or $1 million. If you put that out with us, you'll never have to work again in Costa Rica if you don't spend the $500,000 or whatever it is that you have. Just spend the interest. I mean, can you live on, I don't know, $5,000 a month if you have $500,000? That's pretty good money. And you'll still have your $500,000. At the end, you get your $500,000 back, right? Our terms, by the way, are everything from 6 months up to 3 years. So they're usually short terms. We're called gap for a reason. We're the gap that gets you from one place to another. People always have an idea what they want to do, pay it off fast. Like if it's a B&B, they just pour the money back in, pay it off, and move on. So there's a huge amount of money to be made if you do sell your property back home and want to get into the lending business in Costa Rica. That's our best clients, our best lenders. We don't work with sharks. If we try to teach the people what the rules should be. We are in the between. We know what a lender wants. They want the most, and a borrower wants the least. Somehow we have to get in the middle. The sweet spot seems to be around 12%. If we can get you a 12% loan, that's very, very good. You have to remember, lenders, just like anything, if I was to put out my $500,000, I don't want it back in 2 months. I'm not going to make any money. So I want a commitment, and we try to say, okay, you're going to have a commitment for a year. And what that means is, let's say you get to 10 months and you pay the loan off. You owe 2 more months of interest. That's the commitment you made. So it's very, very good for the lenders to do this. And it's an option for making money without having to work in Costa Rica. I have one guy, he makes his full-time job. He says, I want everything in cash. And he just goes from borrower to borrower each and every month and collects his money and has a coffee. That's his job. He says, I love it. I said, why don't you just get him to put it in your account? He says, I like having a coffee with the borrowers. Okay, that's cool.
I believe you had a question?
Yeah, do you need to own the property to get the loan? In other words, if I see a piece of property, I only got 200K in the bank, they're asking 250. Would you loan the 50 to go in to buy the property?
We would help you buy it with that. Like you would have your 200 and it would be part of the deal where we can collaborate together, yeah.
Yeah, when it comes to purchases, what we're looking for at the very least is 50% for you to put down. It's advantageous for it to be up to at least 60, and that would definitely entice lenders to do the other 40%. It's a little bit easier of a sale, knowing that you're that invested. Okay, so we'll keep going here.
I think I lost
So yeah, just once again with the photo and video quality, it could be even better if you have a video. If a photo is worth 1,000 words, then a video is worth 1,000,000. It just gives a much better idea to the investor. Really quickly, if you just hire a maid or if you declutter, like I was saying before, imagine that you're trying to sell your property like it's real estate. That's the best way to kind of have the mindset when it comes to getting a loan.
When they do real estate, they always take nice pictures. But when they do loans, they just go around and take some fast pictures But it's the same as a real estate. We need to sell this to a lender, and he's looking at everything. If you were the lender, you'd want to know everything. Look at how sloppy the guy is. He didn't even bother to cut his grass for the pictures. Bad sign. We look at everything. You always have to think of what's the worst case scenario, and the worst case scenario is a foreclosure. Our company never had a foreclosure until the pandemic came, and we only had a couple. And it's really sad because the one fellow had a nice building, and he had converted it into offices. It was basically a condo building, still with the kitchens, bathrooms, everything. And when we went to do the loan, he says, all these people have been with me for 10 years. Everything's rented out. And as soon as the pandemic came, he says, they left overnight. The place is empty. I said, it was a condo. Just rent it. You'll have it rented. It's in Barrio Escalante. It's the best area in San Jose. There is no such thing as vacancy. So I said, why don't you just put it back into condos and you'll have it rented by tomorrow? He says, that's a great idea, but he didn't do it. And he lost his property, which I think is crazy. Some people don't want to listen.
So what are our average loan terms? Our investors are looking for terms that are between, on average, of course, between 6 months and 3 years in length. The reason being is that our investors are pretty much guys just like you. They come from North America, they come from Europe. You know, they may have bought a property when they were younger, it appreciated in value. They sell that property for whatever it may be, a few million, come down here and they want to become, you know, full-term lenders as their main occupation. And so that means that, you know, they may be 60, they may be 70, they may be 80. They don't know where they're going to be in more than 3 years length. Maybe they want to move countries, maybe they, you know, have health issues, whatever it may be. That's the reason why usually at the most they're looking for a 3-year.
I'll tell you another reason why they like a 3-year term. Some of my guys are older. You tend to forget. There was this period of time where all my lenders kept saying, can you give me a 5-year term? Can you give me a 5-year term? And every now and then those come up. And one guy said, listen, I have $100,000. I want to get it out as fast as possible. Get me a loan as fast as you can. I said, oh, I got good news. I have a $100,000 loan and a 5-year term. And his face went sour. And I said, you don't like the idea of a 5-year term? He says, I don't think I'm going to be here in 5 years. I'm like, oh shit, never thought of that. So that's another reason. 6 months to 3 years is probably the best. You never know what you're going to be doing down the road.
And these investors, they don't necessarily want to leave, you know, business to their family. Maybe their family isn't as savvy as they are, and they just want everything to be, you know, finished for the time that it comes that they pass on. So when it comes to the prepayment penalty, of course, if it's a 6-month deal, it's only going to be at most 6 months. But the reason why our average terms are either 6 months or 3 years is because there's always going to be at least a 1-year prepayment penalty. So just to give you an example, if you're 10 months into your deal, and let's say you sell your property, you come into some money, you would still owe at least 2 months worth of interest if you tried to pay off the loan at 10 months. So that just ensures that the lender makes the money that they're looking for, that interests them in the loan in the first place.
That's how we try to push them. We try to tell them 1 year is good, and if they're into the 2nd year or 3rd year, you just pay it off anytime you want. Now, that doesn't mean the lender can say, no, I don't like that idea. I want a bigger penalty all the way across. And that will be a guy that I will use last. Because we try to stay within what we think is right for both sides. And once they start drifting from that, we'll use them last as a lender.
So we have competitive yearly interest rates and closing costs when it comes to Costa Rican rules. You know, we are kind of on par when it comes to closing costs with the traditional banking options. They may not call it quote unquote closing costs, but with their fees and whatnot, it all pretty much adds up to the same thing. You know, only basically highly qualified Costa Rican citizens would be lucky to get less than 10% interest per year. And we're talking about, you know, 2 citizens that, you know, both have government jobs. They're only looking for a loan, which is what the bank is looking for, maybe $100,000 on a first purchase property. So everything, all the stars basically have to align for them. and they have to have good reputation with the bank, so on and so forth, for them to get anything less than 10%.
And the rest of us have to pay way more.
Yeah. And
Especially if it's something like a yacht or a plane or anything outside the ordinary, or anything that's over a Tico priced house, which is like about 150. So if you're buying a 250 or 300, 400 $1 million home, you're gonna be in a different category. And the banks, we actually take a lot of loans from the bank, believe it or not, because they'll say, yeah, I have a boat, I bought a yacht or a sailboat to make some money, and they're charging me 24% at the bank. We don't charge that. So we get a lot of loans from the bank.
So in the end, what we're hoping for is that there are multiple investors that are interested in your property. The reason being is that when there are multiple, then we can kind of bid them against each other. Perhaps there's 4 or 5 people we can say, well, if you want to do this right now, lower than 12%, you'll be the one to get the loan. And so that's what we're always looking for. When the loan to value ratio is lower, that allows us to have more to work with. That allows us to get more investors that are interested. When your photos are great, these are all the things that come together that make more lenders want to be involved, and that just allows us to have more to work with to get you the best interest rate possible. Question?
Go ahead and get his first.
Are there considerations on credit score or income and funding loans?
We don't, it's basically built on the equity of the house, which is wonderful. We're not so worried about your score at all. We just take into consideration, do you have a job? How are you going to pay it? Like, what is your game plan to pay it back? And if it sounds like something that works, then that's what we're after. So we're not interested in the score whatsoever.
But once again, every lender is different. Some lenders, they'll ask me for every little piece of information they can get. Other lenders are happy when it just comes to the looking at the property. Every lender has their own set of expectations. And so that's why when there's more lenders that are involved, we can pick the one that is basically the easiest route to work with and the easiest for the borrower to deal with. We had another question.
If you get a lower rate, like if you're established yourself, you're paying your loans, buying more properties, would you get a better rate in the future or just stay the same? Like I know the health
Every loan is unique and on its own. So if you we would say that you're a great lender, borrower, whatever the case may be. And yeah, if you come back for the second time, we would say, listen, we have a track record with this person. And the lenders will take all that like anything, and they take everything into consideration. Where the location is, to who the guy is, to does he look like he can pay,
Yeah, some of our lenders, they'll even go as far as, oh, you've seen the property? I don't need to see it because we've done so many deals together. If you say it's okay, then, I know it's okay. So if I'm able to say, hey, listen, lender, we've done 2-3 deals with this man. He's never been late. That's going to be a big, bonus to your case.
You had a question?
So clarify me, because you're not a bank. You
No.
don't have an endless amount of money.
No.
And when I keep hearing lenders and investors, I think I understand you've got a lot of contacts. And these
Yes.
people have money.
Yes.
And they're willing to loan it. They're going through you to make
Yes.
sure everything is secure.
Yes.
Right?
Yes.
Now, I know I've got a 1-year term. I know I'm locked in. I'm going to pay that. What happens I'm a week late, 2 weeks late?
Well, it'll be whatever's in the contract, but you have to go by that. And it's not a good idea to be late. If you are going to be late, a lot of lenders totally understand things happen. My suggestion always is to immediately talk to the lender and tell them why you're late. It could be something so stupid as you sent it out on a Friday, but it's a holiday on Monday, and they're going to be, late, right? There is you want to pay it on time. That's very, very important. That keeps everything safe. Right? Your contract says that you're going to pay on whatever date it is that you want to pay, and that's what you do. You keep doing that, nothing can go wrong.
What's
Okay.
typical default situation? Get that right.
Well, we had the pandemic come, and what we did was we asked all the lenders to help out, and we asked them all to give them 6 months grace and put it at the end. And everybody did that, and that helped everybody, except for that one guy.
So the default process, you know, if you're a lender, you would have to go through it with your lawyer. There is some money involved, roughly 5% to get started of the loan, and then 5% once you're done. So you have to kind of keep that in mind.
On a foreclosure.
Yeah, on a foreclosure. So that just is like, you know, a little bit of extra expense. And then depending on if you use an escrow or funds.
Let me explain how a foreclosure works. So what Lawson was saying is, if you do go to a foreclosure, your property, or you lent out $100,000, you would have to pay the lawyer $5,000. He'll start the foreclosure at the end, and in Costa Rica, you'll probably end up with the property. So let's just say you did do $1 million deal. You know, you lent $100,000 on $1 million property. You'll end up with the $1 million property in most cases. That's how crazy it is. It depends on where it is in Costa Rica. It can take a few months, but remember, the borrower is the one who pays everything. I know you have to pay 5% to the lender, or to the lawyer, but you know that comes back in the money that you get. We did do a loan for $1 million, and the property was worth $3 million. It came back. It all worked out. He had to pay, but he got it back, and so it was good.
So
Go ahead.
let's look at this scenario as he talked about. He found the property.
Yep.
But they want $250,000 for it. But he does have the $200,000. He does borrow the $50,000. Okay. If things are going great and he's paying on time. However, something happens. What is that? What is the normal? If there is a normal, what is that normal cutoff date that I'm maybe the lender, and I'm like, well, it's been 2 weeks. He hasn't paid me. Somewhere in that contract, there must be a date or a time. I've got a total of 30 days.
In all honesty, it is the day that you're late. So keep that in mind. Now, nobody ever does that because we usually have a 3-day clause saying that you can be 3 days late. And after that, most of our lenders will just have a penalty. That's all they want. So they'll just charge you a penalty until you pay it up and carry on. I've never had a guy say, okay, well, actually I did, and I got rid of him. I had one guy, every time the guy was late, he'd say, foreclose. And I said, you know what? I don't work with guys like you. And he was my richest lender. And everybody said, why'd you get rid of him? Every time the guy's a minute late, he's saying, foreclose, foreclose, foreclose. I get an email every month, foreclose on this guy, foreclose on this. First of all, when you do a loan with us, you're a month ahead because on the day you borrow the money, you pay your first payment. So you're actually a month ahead. And that's what I'm trying to tell this lender is he's a month ahead, so he's not 3 days behind. Keep that in mind. But the contract is the contract. It's very, it can be very strict as it is. The way it's written is what you have to go by.
So what I was looking at is that right there.
But it's the same with the bank.
Well, you're already 30 days ahead, so you're not late, you're actually ahead.
Yes.
So, but as always, you want to pay ahead, but your protection is, well, your biggest protection is GAAP. They're making sure they have private lenders that are, that aren't greedy saying, I want
Yes.
my house, I want my house, I want my house. He's got great lenders. Hey, things happen. Everybody, all of us get it from time to time. I forgot. Well, you forgot, but you're 30 days ahead.
Yeah.
So you really don't have that big of a worry, right? You're careful.
I'll tell you what the best thing to do, pay 1 more month ahead. And forget that you did that. And then just carry on paying on like you've never done that. And now you'll never have a problem. And that's what I suggest to all the people, and the ones that do it love me for suggesting that, because if you're 3 days late, you're not 3 days late. You're a month ahead, 2 months ahead.
So how the LTV rate reflects the interest rate is as follows. So for example, you have a $200,000 property. You're looking to borrow $50,000 to buy a pool. That would be a 25% loan to value ratio. These are the kinds of ratios that our investors are looking to find. Anything in the 25 or below is, like we were saying earlier, a no-brainer for them. This is something that would attract multiple investors. The reason being is that you're investing in the property with the loan. So that just brings more people's interest to your property and allows me to have more to work with when it comes to the interest rate and to drive that interest rate down. Yeah, it's pretty much anything to say on that one.
No, that's good.
So when it comes to the point where a lender is interested they are most likely going to want to see your property. That means that there's going to be a site visit. The best case scenario is just when we come to see the property, have it all clean and whatnot and organized. And then you could possibly just go for a coffee, or you can, come with us as well. It's all the same. Not all investors are going to want to see the property, but most will. And sometimes we'll actually come to see the property beforehand, just to maybe do some better photos than what you can do, and just inspect things ourselves before we put out the alert.
When I've been in construction for years, and so I check everything, whether it's concrete, whether it's bad plumbing, whether it's bad electrical, if it looks like it's about to fall down. All this is my years of experience in construction. So when I talk to the analyst, I'll explain all that to him, what I saw, plus I'll show him the pictures and I'll detail, I didn't like this because it's too close to the river. I didn't like this because it's a sloppy roof job. There's leaks over here, whatever the case may be. And we take everything into consideration when we value the property.
Yeah, things such as, houses made out of lumber. If you're in a termite-ridden area, this will be taken into consideration.
Costa Rica.
Pretty much you can't go anywhere without
Termites are everywhere.
termites. Yeah, it's just, that's the natural, situation here. So,
And termites are not a problem. You just have to deal with them. And, you want to deal with better, like what they'll do is they'll make their roof out of wood, and that's where termites like to live. So I would suggest using metal in your roof, things like that. But the good thing about the construction here is very, very sound. If you got a good builder in Costa Rica and they do earthquake proof, my house has been there since the 70s. I got some slight cracks. I feel the house vibrating on every earthquake. The whole thing is moving all over, and I just get a few cracks. So the construction can be very good, and we're looking for good construction. If we look at a wooden house, yes, we're going to check for termites, because if you got termites, it could be too far gone. Like, it's not hard to get rid of termites. You just have to make sure you can get to every part of the wood to cover it. If you can't, then they're going to get in there, and you're still going to have a problem. So termites are a huge, huge thing.
Yeah, so basically, we'll rate the house from 1 to 5. 1 being, I'm not sure if you've seen it before, but if you go to some of these shorter people's homes here, the locals, they'll maybe build the doorways 6 feet high. That's going to be a 1 from us. And then if there's really high standards, we'll give it a 5. And that's just for, our analysts to give the best that you can give. It's just
you might not know this, but some people build the house on the side and they've never built the house before. And then they come to us for a loan, and I'm like, where are the outlets? Oh, I didn't want any. Okay. So the crazy things like that. We're looking for normal houses because, once again, there are standards for a reason. And what he was talking about, I walked into a house and I couldn't fit into it. And I said, how come you built your house this height? He says, look at us, we're only this tall. Yeah, but don't you ever plan to sell it? Oh, never thought of that. I'll sell it to somebody short. You limited yourself on that one. Plus you can't invite anybody like me over without walking like this. And yes, I've seen houses like that and they wanted to borrow money. And no, we didn't do them.
So our 18-step loan process, just from start to finish, just to give you an idea, of what we do. Our system vets the loan initially with our loan request form. We check the National Registry for any legal issues or liens on the property. So basically, there's a website that allows you to see everything that's happened with the property. If there's anything small on there, large or big. We evaluate the exact location of the property. Our analyst researches comparables in the area just to see what's sold nearby. If there's something that looks familiar, we can kind of use that. Just to see if the loan request and valuation stated on the pre-application are reasonable. Once we establish the loan is good enough for consideration, we request the entire application. So part 2, we verify that all the taxes are up to date, including the HOA fees.
That's another thing. When we do a loan and you owe money to the HOA, taxes you haven't paid for the last bunch of years, all that gets paid in the loan. So let's say you want 100,000, we're going to say, well, maybe you need 110 because you need to clean up everything that's on your property. And by the way, we'll make sure that gets done. We won't do a loan that's just sloppy. You have to have insurance on your property in case something happens.
The reason being is, for example, the HOA, Homeowners Association, there's called cul-de-sacs where if you don't cut your grass for whatever it may be a year, they can technically take over that property. That could be their way of doing it because you're not following their guidelines. Usually the HOA fees are pretty small, whatever it may be, $100 per month. These are just the types of things that we look for because these are the types of things that can come into consideration when it comes to lawyers and whatnot. But so our consultants follow up to verify that the information is correct and establish the borrower's ability to pay off the loan. So yeah, we do make sure that you as the borrower actually have a game plan. We want to make sure that you can finish with the loan, that you can pay per month, just to for one, and make sure that our lenders are protected, and for two, to make sure you're protected just the same, because we're not looking for defaults here, and neither are our lenders. It's just more of a headache than anything, so we try to avoid it as best we can. We perform a site visit, like we were talking about earlier, just to take current up-to-date photos, make sure that the photos are true, and it's for example, we've seen photos where they're taken 5 to 10 years ago, and they try to say that this is what my house looks like now, but in reality
We've had it all.
the plants are overgrown, the windows are falling off or whatnot. We've seen it all. So our analyst then gives the final evaluation. Like I was saying, our analyst has been with us since day one. So his word to us is pretty much God. We follow him to the T. He's never really steered us wrong, so we just are very confident with him. We send the loan request out to our private lenders we work with and determine who will be funding the loan. So we have a network of over 800 lenders that's constantly growing, constantly falling off. There's some lenders are liquid, some aren't, so it's just a matter of timing and whatnot. But we do have a large base, so that most likely, if you have a good loan, there's going to be multiple people that are interested.
We generally fund a loan within a week, which is phenomenal. I don't know, in Costa Rica, the banks can take a year or longer just to tell you no. And we're going to tell you no or yes within a week or less. We've actually done a loan in 24 hours. And that's, for Costa Rica, that's good.
Yeah, what it comes down to it all comes down to the due diligence. When it comes to funding the loan, it can be a very fast process, under a week. But if there is things like HOA fees that you have to pay off, you're just going to have to quickly get that done as fast as possible. Otherwise, it's you who's going to be holding back the deal because you're saying you're going to do something and then you take your time. That's really the slow factor of these loans. So we work with a borrower to make sure there is insurance on the property. Every loan we have to make sure that there's insurance.
And the insurance has to be for the entire value of the property, not just the value of the loan.
Correct. And so yeah, there's earthquakes pretty much every day in Costa Rica. There's always a potential of fire, and where it's a hot country like Costa Rica, everything is very dry, especially if it's a house made out of wood. That's an extra element that we have to secure our lender against. So and actually insurance is very cheap. We do have a recommended lawyer. Just to give you an example, I have a loan right now. It's going for $80,000. The property is worth, I think, somewhere around $300,000, and he's only paying roughly $600 a year.
For total insurance.
For the full insurance, it's $300,000. So it's not really that big of a deal, and it's just makes the lender feel so much better. So once the lender says yes, we generate a term sheet, which just gives out all the numbers, so you'll be able to see everything broken down to the dollar, and so that both sides can agree and know what they're getting themselves into. We send it to the lawyer to verify and prepare the draft for the protocol book. We receive the documents and send them to the lender and the borrower, like I was saying, just for both sides to review so that there's no confusion. When we go to the signing, both sides are in full understanding of everything. The lender or borrower makes any minor tweaks or changes. If there's something small that needs to be done, that would be the time to do it. And then we send the final draft term sheet to all the parties to make sure everyone's in agreement. We coordinate the signing with the lender, the borrower, the lawyer, the notary, and any other party that needs to be paid off. So usually it will be in San Jose at the notary's office, probably in the morning, which gives us time to go to the bank afterwards if there needs to be money sent that way. We meet at the notary's office, like I was just saying, just to sign the protocol book. And then the lender usually distributes the funds by SynPay, which is the local bank transfer.
Just because nobody trusts anybody, it's kind of a funny thing when you're doing a closing. So the guy's ready to push the button to give you the money, but he wants to see that you signed the document first. So he's ready with his phone. He's like, okay, I'll press the button as soon as you sign the book. The lawyer says, okay. We're all in the same room. There could be a lot of people, a lot of lawyers. And so you say, okay, we just signed the document. Okay, send the money. You have it. Deal's done. It's just that simple.
Technically speaking, it's only the person that owns the property. Maybe the husband and the wife own the property. Those are the only two that actually need to be in with the notary. But of course, like my father was saying, usually the lender wants to be there just to see with their own two eyes that you've actually signed the protocol. And then once you've signed, that's when they hand over the check because everything is said and done. And now that the loan is in place, the lawyer should check the National Registry. The lender's lawyer should check the National Registry just within 30 days just to make sure that it's been listed and everything.
It can get kicked out because you spelled something wrong, and it just gets kicked out. So you need to make sure that didn't happen because you don't have a loan.
Yep. And then when it comes to the lawyer and notary requirements, it's pretty simple. For example, they would just need the PDF format of at least 2 different ID documents. If you are a resident here, that would be a DMEX and a cedula, or a cedula rather, and a passport. If you're a foreigner, it would be a passport and a residency card or a driver's license, but always the passport for sure. That is the number one thing that they're looking for. One thing about passports as well, as a Canadian, I think there's a lot of Canadians here, you get a different number every time that you go for a new passport. So make sure that you keep that old passport and make sure that you keep your lawyer, because if there's any issues with the numbers, because it changes, you want to make sure that they can back you up and say that you are who you are. And if you don't have that lawyer, it can be a very difficult time if you're Canadian.
If you bought a house, let's say 20 years ago, and you used your Canadian passport, then you got another passport, and then you got another passport, well, your 3 passports passed, and that's a really big problem. And the best person that can help you with that is the lawyer that did the deal. If he's dead and gone, you really got a problem. If you do buy a house in Costa Rica and you're using your passport, the minute you get your cedula or your next passport and it's a different number, update the information immediately. That's something that never gets done in Costa Rica, and it's huge.
And like I said, more important for Canadians. I think Americans keep the same number, so it's not as pivotal. But for Canadians, every time you get a new passport, you never know how long your lawyer is going to want to work with you or stay alive, or you know what I mean. So you might as well keep it up to date, just so that you're always ready to go at any time.
The reason it's easy for that guy is because he can say, I absolutely know the guy. I'm the one who did the first loan or the first property sale. So yeah, he has but a new lawyer going in, there's a lot of documentation, swearing that you're the right person, all that sort of thing.
Question?
Just so you know, Americans, like our passport numbers change as well. So when
They do.
through saying, it's very important for you to know, because I ran into that exact issue. Okay, so I just keep my old passport, and I have my old passport handy.
Yeah, don't throw away your old one.
Passport number will change for Americans as well.
Oh, I didn't
Yeah.
realize that. Question?
Canadians, we have to turn in our old passports.
Last time I did it personally, we didn't, but now we do.
Well, photocopy it. Just photocopy it. You're good.
Just change for our old passports.
And by the way, when you guys are in Costa Rica, one of the best tricks you can do for yourself, I know there's other ways, but you should take a picture of everything you own, your driver's license, your whatever, everything, and email it to yourself. Because if you end up, I don't know, in jail, you can say to your friend, here's my passport number to get into password to get into my Gmail account and get me my documents so I can get out. I'll tell you a quick story. We got stopped on the bus, and one guy, I told him, bring your passport, and he forgot. And so he ended up in jail. And they said to him, if you can just show us your passport, we'll let you out. It was in his room, and his room was locked, and how do you do all that? And in the safe. And he was in Le Mans, which is like 6 hours away, and they said, go get that and come back with it. So if you just email everything to yourself, you can say to your friend, just go get it off my email, and you have everything you need. It's just a good trick.
Yeah, I would say even carry a paper version with you. That can help you. Every officer can be different. Sometimes they want to be jerks and say, "Oh, I want the original," but most of the time, it seems like if you have a copy at least of not just your face, but as well as your stamp.
They always
so they
want
can
the
see
stamp.
both.
The stamp is the most important.
Yeah, the stamp is what they're really looking for to make sure that you're legal.
Did everybody get 180 days when they came in?
That's a
Yeah.
good question. Yeah, everyone got 800.
That's the new. Everybody's getting 180 days, but you got to remember that's only good for that. It's not good for your driver's license. It's two different things. Your driver's license, you have to go out and come back in until they get that figured out. They are fighting about it. They can take a while, but it just doesn't make sense. And you seem to know about it. Yeah.
So, yeah. When it comes to the notary requirements, they will need the exact home address with your description. The reason being is, funny enough, in Costa Rica, they still haven't figured out addresses in general. So sometimes, I mean, they might say, 150 meters from the old tree, and different directions like that. And that old tree might not even be there anymore. It might be cut down, a year ago, but they still use that as your actual home address. So an exact home address is what the notary will need. Just simple things like your email address and your phone number, personal information such as your marital status, your occupation, your nationality. If the property is in a business, they're going to need to have the shareholders registry as well as the minutes, just to ensure that everybody in the company realizes that this is what's going on. If the house is just in your name or you and your partner's name, then you won't need that, for instance. And just a few, requirements on that level that the notary will need. Nothing too difficult there. So now we got questions?
Question, do you have to have an established bank account in Costa Rica to participate as a borrower?
You can send your money right from the States to the deal. But
As the borrower.
yeah.
That was my second question.
Okay.
I wanted to be an investor as well, I transfer.
Well, we've had all kinds of scenarios. There'll be two Americans saying, "Listen, you know what? I prefer to borrow my money from you in the States and pay you in the States." That's fine. We've had all kinds of different scenarios like that.
One of the last deals I did, I went from New Zealand to the United States, nothing to do with Costa Rica. Or sometimes it'll be from the States to Costa Rica. There's all different ways to do it. And as long as, the investor and the borrower are in agreement, it could be Bitcoin, it could be crypto, it could be,
Whatever they agree on.
It could be chocolate chips. I mean, it's
Whatever you
in the
agree.
contract.
And one additional question, in the U.S., mortgage interest is deductible for your taxes, both for business and personal. Is that something that's the case in Costa Rica as well?
So the question was, in the U.S., your interest, your mortgage is deductible. Is that something that is, I'm borrowing money from you, can I use that on my taxes in the United States?
Yeah, because sorry for you if you're from the USA, we're from Canada, but yeah, you have to pay taxes over there. Remember I told you the story about the guy who went around collecting his money? That was why.
Okay.
Yeah, so if you're from the States, Uncle Sam seems to always be after you, and that's just how it is.
Did you have a question?
No.
No? Okay.
So when it comes to the investment program, basically what it boils down to is if you are investing $100,000 into a loan, that boils down to $1,000 per month at a 12% interest rate. So you could be making $12,000 profit per year per 100,000. And that's at a 12% interest loan. So that means that the LTV, the loan to value ratio, is probably going to be around 20 to 30%. Now, if you're on the other hand, if you're willing to risk a little bit more when it comes to the loan to value ratio, you could actually have a higher interest rate than that. Call it, 14, 15% if we're getting close to that 50% mark, depending on, of course, the location and so on and so forth. So it can be, a full-time job for many of our investors. They work with us. They work with other companies as well, and their full-time job is just to collect money, do loans, and basically just profit from having money to invest with.
Go to the next slide. And here's the good part. We have a referral program. One of the things that we have is actually a lot of money, because every retiree that comes down here tells us they have $500,000, $1 million, whatever the case may be. What we're always looking for is really, really, really good loans. It's the only ones we want, and we actually pay for them. So if you guys want to get into the habit of sending us, I mean, people, once you're here, you'll know people are building, borrowing, needing money, and don't know how to get to us. The biggest thing, we advertise everywhere, but when they ever find us, they're like, wow, I wish I found you sooner. We're trying, we're out there everywhere. And, so we do have a referral program, and we pay well on that. So just for a simple call to say, hey, listen, I know these guys can do a loan for you, give them a call. We pay a referral fee. So that's another way you can make extra cash in Costa Rica. And there's some people making a living with it. You send us a $100,000 loan, and our typical loans are $100,000, and it sounds like, well, I'll never get $100,000. That's what we do all day long is a $100,000 loan. So you're making $500 just for sending us a lead, and so that's pretty good.
And so when you are sending us a lead, it can be as simple as just giving us a name and an email address, preferably a WhatsApp number, but if they don't have it, just a phone number in general. And that could be it. That could be enough. You would get paid at the close, of course. So when we get paid, basically you get paid. And so, yeah, you just send in the client's name and number. That's about it. And if you wanted to do the extra step, I would suggest that you would ask the loan to value ratio. You don't need to do an analysis of the property, but for example, if they're looking to borrow $50,000 on a $300,000 property, then you know that that's going to be perfect, and you're probably going to be able to close that loan. But if they're asking for 150, or if they're asking for 300,000 on 300,000, then you know that we can't do that loan, so there's not really a point of even bringing it up. But if it's close, maybe it's, let's say, 150 and 300, maybe we can work with them and figure it out. That's, basically the 50% mark is the most that we can work with. Question?
Okay, so I know I can borrow money from you, but hey, now I've decided I want to be one of the investors. Can we walk through that scenario for a moment so we can get a better understanding of that? So I want to be an investor, right? And I noticed up there, I've got 100,000, and you're telling me, hey, I can make $1,000 a month on my 100,000. That's awesome, right? That's easy money. How do I know? I saw the word that says alerts. How do I know what inventory do you have? Do I have to go to your office and see what inventory is there? How do I know what inventory you have?
You sign up for our email, you get on our list. We have two lists, the one that's really active, and then we have a looky-loo one, because there's a lot of people who just want to follow us for, well, it's so funny. We'll have a guy who'll come up and say, hey, I've been following you for 3 years now. This is the one. I like this loan. Let's get started. So we have the lenders that we use on a regular basis. We already have guys, I'll do 100, I'll do 200. We already have all those kinds of guys. And then when we have a loan that we don't know who's going to do it, our other people come in, and it's always funny because they'll say, this is the one for me. So, yeah.
So I've been following these guys for a long time, and those emails just come to you. And so as those emails come in, it's really kind of first come, first serve. They
Yes.
come to you, you need to respond quickly because he does have a lot of.
First come, we can, in all honesty, we can have 6 people jump, it'll go out, and in 1 second we can have 6 people wanting it. So then it boils down to, well, who's the jerk of all of these guys, right? Like this guy wants everything. He even wants a higher interest rate, and this guy's going, hey, I'll take it right now at 12%. Okay, we like you. This guy, you're out, right? So we work with the easiest flow. So if you're a lender that's with us, and that's what ends up happening, you know us, we know you, and if you want it at 12% or whatever it is that we're putting out, you're probably going to be the one to get it.
And I know that my money is secure because I've loaned $100,000, but I've loaned $100,000 on a $200,000 property, and that property immediately goes into my name. Is that correct?
No, it's a lien that's on the property. There's 2 ways it can be done. It can be done in a trust, or usually it's just done with a lien. Simple, because people get scared when it's in a trust, because a trust, I think everybody knows, is you say that you're going to do this, and whatever side doesn't do it, the other side gets it, right? So in a foreclosure, you go down the road of going, hey, you missed the payment, you talk about it, so on and so forth. There are times when we use a trust because there's no trust, right? If there's no trust, then we go to a trust. But for the most part, when you're doing a nice LTV, everybody's happy. It's straightforward. I like the word, it's a no-brainer. If it's a no-brainer, like if somebody said I wanted to borrow $50,000 on this, I could have a lender in about 10 seconds, right? But if you told me you wanted to borrow $3 million on this, maybe it's worth it. Maybe it is. I don't know. Now we got to get serious and analyze it. That's the difference. So I like to say, if you just can look at it. Matter of fact, I have a lender in Le Mans, and I wasn't able to go to Le Mans. And I said, and he had done a lot of loans with. I said, listen, I have a loan that's right by your house, but I don't want to drive there. I said, I think this is something you're going to like. He says, well, but I don't have you as my backup. I said, I get it, but you're not dumb. If you walk in and you go, oh my God, this is a no-brainer, let's do the deal. If you go, I don't know, let's not. So we like to work with that word, no-brainer. Keep it simple.
Yeah, I mean, being in full contact with me is really your best bet as an investor. If you have issues with spam in your email or whatnot, you can text me and I'll let you know about any deals. If you tell me, for example, oh, I'm looking for a deal between 1,500 per 1,000 or whatever it may be, I have X amount of money available, can you get my money out as fast as possible? If you really want to get on the top of my list, tell me that you're willing to do 11% interest, and I will have you as the number one position, because that's 1 point lower than what lenders are kind of expecting, which is 12%.
We have guys come in and say, listen, I got $1 million and I'm willing to put it out at 10%. So I'll put a notice out going, I have 10% money, but you better move fast because that 10% will definitely go like that. I know these numbers sound high because you guys are from other places where you can probably get 4 and 5%. I don't know what the interest rate is now. But in Costa Rica, believe it or not, these are really, really good numbers. Like I say, if you go to the bank and you're getting a 24% loan, you're happy to deal with us.
Yeah, I mean, even locals here, when we can get them a 12% deal, they jump on it because they realize that the traditional banking options are, possibly even more expensive when it comes down to it in the end of the day. And so, our clients are just as much, nationals as they are foreigners, because these are just the going rates, and, everyone kind of understands that.
How do banks here make money if they're so lucky to lend it out? I thought that's how banks make their money.
Well, they put out all the money they can. It's just that they don't have any money, so they pick and choose what they want. One big thing that happened back in 2008 that really screwed up everything for everybody is at that time the banks were lending to gringos all day long. So what happened in 2008? You lived in Costa Rica, you borrowed $10 million to build a 5-story building. 2008 came, all the gringos just left. That's all. They just left the country. What are you going to do? Right? What are you going to do? So the banks just said, well, this is not good. We don't like this anymore. So then they came down hard on gringos trying to borrow money. Gringos are, by the way, is a good word in case you don't know. So yeah.
All right, so that's the final slide for us. If there's any final questions, I'd be glad to answer them. If not, that's it for us.
Over here.
How do you sign up for just through your website?
Yeah, you can sign up.
Yeah,
for
I'm
that.
actually going to be handing out my card to everybody. If you do have a referral, we're going to know who you are when you refer. And at the close, the whole way through, we will keep you, in up to date with the.
And like I say, you want to get on our list just to follow us, just to see what's going on. It doesn't hurt anything, doesn't cost anything. Just get on our list and see what we do. And then you'll get a comfort level because you'll see. The thing is, there are sharks in this country. And of course, we get put into that category, but we're not those people. Like I say, we don't want to do bad loans. We don't want to take back property. My lenders don't want. That's a headache to take back a property. And what are you going to do with it? You got to sell it or, I don't know, live in it. But it's not a business, right? For those, there is a business of people trying to steal land, but that's not the business we're in. We're trying to work with good lenders. And like I say, most of our people come from people like you guys who moved to Costa Rica, sold their property, and ended up with $500,000 or $1 million. That's all day long right now. All us baby boomers, you guys are all the same age. All us baby boomers are, well, I imagine you're all the same. Maybe a little younger. What's the next one under?
X?
X? All you X guys? Anyways, you get the point. Any other questions? I think we're pretty much ready to go.
Question? What do you do more
Sorry?
Borrowers or lenders, what do we need more?
We have more money than God. But that doesn't always mean anything because there might be a loan that none of them like, but somebody will. You know, like people are funny. I had one guy not do a loan because his wife didn't like the color of the kitchen.
And that happens.
It happens.
Funny enough, that happens. And
So I can have a lot of lenders, but still nobody likes this loan or wants this particular loan. So the more lenders we have, that's fine. But we do have a lot of lenders. The hardest thing to get in Costa Rica is good quality loans because we won't do anything else.
yeah,
Last time we did a show, we ran just when you come to our site, you'll see a video that shows all the loans that we've done over the past, and you'll see they're high quality, $400, $500 million properties, all the way down to $100,000 properties. So we have a variety of everything.
yeah. So I'm the one that kind of filters the loans. Generally speaking, it's the majority, unfortunately, can't be funded, and that's because the loan to value ratio is just too far off. You know, it's over 50%, or maybe it's in the middle of nowhere, or maybe it's just a land deal. When it comes to just land deals, the most that we can lend on average, even if it is in a good location, would be roughly around 10%. The reason being is that our lenders realize how difficult it is to sell something that's just land. And
For
so
all the
they're-
reasons we talked about before, you don't have permits, you may have a pond on there, all these things you need to discover. So it's scary.
Yeah, so my recommendation to people who have land and they want to build is just to get the foundation in. If you can get that first nudge in, that means to the lenders and to us that you have all your permits, you have your water, you have your electricity, you have everything that you need to move forward. And at that point, we can give you more than 10% than what we would get just off of the land.
And we work with you to getting into the loan. We help you.
There's another question here.
You said this, as an investor, that $12,000 a year, is that subject to U.S. taxes, Costa Rican taxes?
Both.
Yeah, as a person from the United States, I believe that, you know, Uncle Sam kind of follows you around everywhere. As a Canadian, it's different rules. You know, every country kind of has their own rules in place, but
I can tell you what some of the lenders do is they'll just do a loan and collect cash. And what they do, that's totally up to them. Like they'll put it right in the deal that I'm going to come to you and get and give you cash every year. Now you can have a bad loan. For instance, you can lend $200,000 out and not make a penny. That's up to you.
We got plenty of time at the moment, a few more minutes, so if you do have a question, all good. All right, hey folks, give Glenn and